The solar panels are everywhere, powering our future. But did you know that by 2030, industrial applications, including solar, could consume over 85% of the world's annual silver supply? There's a ticking time bomb within their core, the silver supply. As demand for solar explodes, we're exposing the unseen forces, creating a massive bottleneck in the industrial silver market. This isn't just about supply and demand. It's about a looming crisis that could secretly drive silver to $100. A truly unprecedented price. Don't miss this. Let me take you back to a moment that changed everything. Picture this. It's 2024 and the world just installed 597 gigawatts of solar capacity in a single year. Not just a number on a chart. That's millions of solar panels covering rooftops, fields, and deserts across every continent. Each one of those panels shining in the sun contains something most people never think about: silver. About 20 grams of it to be exact. Now, 20 grams might not sound like much. You could hold it in your palm, but when you multiply that by hundreds of millions of panels, something extraordinary happens. We're not just talking about a commodity anymore, we're talking about the fuel of the green revolution. And it's running out faster than anyone imagined. Right now, as I'm speaking to you, silver is trading at around $65 to $67 per ounce. That's already a massive jump from where it was just a couple of years ago. I'm not a financial advisor. This isn't financial advice, and I'm not affiliated with anyone mentioned in this video. This is purely educational analysis based on publicly available information. But here's the thing. This isn't the peak. This is just the beginning of a story that's been building for years, and most people have no idea it's happening. See, there's a perfect storm brewing in the silver market, and solar energy is at the center of it. So buckle up, because what I'm about to show you will change the way you see every solar panel you pass on the highway. Let's start with the basics, because understanding this crisis means understanding why silver and solar panels are inseparable. When sunlight hits a solar cell, it creates electrons. Those electrons need to flow somewhere to create electricity, right? That's where silver comes in. Silver paste is screen printed onto the surface of these cells, forming tiny conductive lines called fingers and bus bars. Why silver? Because it has the highest electrical conductivity of any metal on Earth. It's not just good at conducting electricity, it's the best. Plus, it has incredible thermal efficiency and optical reflectivity, which means it helps the panel capture and convert sunlight more effectively. Now, you might be thinking, can't they just use something else? Copper, maybe aluminum. The truth is, researchers have tried. They've spent years looking for alternatives because silver is expensive and, as we're about to see, increasingly scarce. But nothing comes close to silver's performance. Sure, you can reduce the amount of silver per panel, and manufacturers are doing that through a process called thrifting, but you can't eliminate it entirely. Not if you want efficient, reliable solar panels. And here's the kicker. Even with thrifting, the sheer number of panels being produced means total silver demand keeps climbing. Each solar panel uses between 15 to 25 grams of silver, with the average sitting around. That might seem tiny, but let me put this in perspective. In 2024, the solar industry consumed over 200 million ounces of silver. That's more than 6,000 metric tons. That's just 1 year. Now, let's talk about what's coming. The world has committed to tripling renewable energy capacity. That's the COP28 pledge, signed by nations representing billions of people. Solar energy is expected to drive 65 to 80% of that growth, because it's the cheapest, fastest to deploy renewable technology we have. We're talking about going from 2.2 terawatts of solar capacity at the end of 2024 to potentially 8 terawatts by 2030 in an aggressive scenario. Let me break that down for you. To hit those targets, we need to install close to of solar capacity per year by 2030. That's almost double what we did in 2024. And every gigawatt requires millions of panels, each one consuming silver. If we do the math, and I've done it, by 2030, the solar industry alone could require over 250 million ounces of silver annually. Now, here's where it gets really interesting. Global silver mine production has been essentially flat for years. In 2025, miners are expected to produce around 813 million ounces of silver. That number hasn't budged year over year. Recycling adds a bit more, maybe another 150 million ounces, but recycling rates are growing slowly. So total supply is roughly 950 million ounces per year. But total demand in 2025, it's projected to hit 1.12 billion ounces. Do you see the problem? Demand is outstripping supply by nearly 170 million ounces this year alone. And it's not just this year. Since 2021, the silver market has been in a structural deficit every single year. We're talking about a cumulative shortfall of 67, another 95 to 18 million ounces added in 2025. That's nearly 800 million ounces of silver that the market needed but couldn't get. Now, where does that missing silver come from? It comes from above ground inventories, stockpiles held by refiners, mints, exchanges, and investors. And those stockpiles are being drained fast. Now, you might be wondering, why can't miners just produce more silver? Great question. Here's the thing. Silver isn't usually mined on its own. About 70% of silver comes as a byproduct of mining other metals like copper, lead, and zinc. That means silver production is tied to the economics of those other metals. If copper prices are low, miners cut back on copper production and silver production falls with it. Even when silver prices rise, it doesn't immediately incentivize more mining because the infrastructure building new mines, expanding existing ones, takes years and billions of dollars. So supply is sticky. It doesn't respond quickly to price signals. Meanwhile, demand is exploding. And it's not just solar. Silver is used in electronics, electric vehicles, 5G infrastructure, medical devices, and even AI hardware. Every smartphone, every laptop, every EV battery system, they all use silver. Industrial demand hit a record in 2024, and it's climbing. But solar is the big driver. Why? Because the green energy transition isn't optional anymore. Governments around the world have set legally binding targets to reduce carbon emissions. Companies are under pressure from investors and consumers to go green, and solar is the fastest way to do it. That means the demand for silver from solar isn't just growing, it's accelerating and it's price inelastic. Let me explain what that means. When you're a solar panel manufacturer, you can't just decide not to use silver because the price went up. Silver is essential to your product. Without it, your panels don't work, so you have to buy it no matter the cost. You might try to use a little less per panel, but you still need it. This is very different from, say, jewelry demand. If silver prices spike, people can choose not to buy silver jewelry. But industrial buyers, they don't have that luxury. They need silver like a car needs fuel. And when supply is tight, that creates a bidding war. This is where things get really fascinating. We're starting to see something in the silver market called backwardation. That's a fancy term, but here's what it means. Normally, the price of silver for delivery in the future, like 6 months from now, is higher than the price for immediate delivery. That makes sense, right? You're paying a premium for the convenience of getting it later. But when backwardation happens, it flips. The spot price, the price for silver you can get right now, is higher than the futures price. That's a red flag. It means people are desperate for physical silver today. They're willing to pay a premium to get their hands on it immediately rather than wait. And that's exactly what's happening in late 2025. Backwardation gaps have hit 2. That might not sound like much, but in commodity markets, it's huge. It signals physical shortage. And industrial buyers are feeling the squeeze. Major manufacturers in the solar and semiconductor industries are moving away from traditional futures markets and locking in long-term supply contracts directly with miners and refiners. They're paying premiums, sometimes substantial ones, to secure silver for the next few years. Why? Because they can't afford production disruption. Imagine you're running a solar panel factory and suddenly you can't get silver. Your entire production line shuts down. You miss delivery deadlines. You lose contracts. That's a nightmare scenario. So these companies are paying up, and that's putting even more upward pressure on prices. Now, let's talk about history, because this isn't the first time we've seen a commodity market go haywire during an industrial boom. In fact, silver has been here before. Let me take you back to the 90s. The world was in the middle of stagflation, high inflation, slow growth, and soaring energy prices. At the same time, industrial demand for silver was rising, driven by photography, electronics, and early computing. Silver was also seen as an inflation hedge, so investors were piling in. Between 1970 and 1980, silver prices skyrocketed from about 129 per ounce to $50 per ounce. That's a 38 times increase in just a decade. Part of that was driven by the Hunt brothers, who tried to corner the market, but a huge part was genuine supply-demand imbalance. Fast forward to 2008 to 2011. After the financial crisis, silver went on another tier, climbing from around $10 to nearly $50 per ounce. Again, physical premiums spiked. Coins like the American Silver Eagle were selling for 20 to 50% above spot. Why? Because investors were fleeing to safe havens, and industrial recovery was driving demand. But here's the key difference between those episodes and what's happening now. Back then, the demand spikes were driven by financial speculation and macroeconomic chaos. Today, it's industrial demand that's leading the charge. And industrial demand is stickier. It's structural. It's not going away when the economy stabilizes. If anything, it's going to grow as the world electrifies and decarbonizes. Let me give you another historical parallel. In the early 20th century, during the electrification boom, copper prices soared. Copper was essential for electrical wiring, just like silver is essential for solar panels today. As factories, railroads, and cities wired up, copper demand exploded. Prices rose 50% above trend levels. Miners scrambled to keep up, but it took years to bring new supply online. Sound familiar? That's exactly what's happening with silver right now. We're in the middle of the green electrification boom, and silver is the copper of the century. Now let's project this forward. What does the silver market look like in 2030? If current trends continue, annual solar installations will hit close to 1,000. Even with aggressive thrifting, let's say manufacturers cut silver use per panel by 30% over the next 5 years, the solar industry will still need around 2 ounces of silver per year. Add in demand from other industrial sectors, another 400 to 500 million ounces, plus investment in jewelry demand, and you're looking at total demand well over 1 billion ounces annually. But supply, even if miners get lucky and squeeze out an extra 50 million ounces per year through new projects and recycling, ramps up, we're still talking about total supply of maybe 1 billion ounces max. That's a razor-thin margin. Any disruption, a mine closure, a geopolitical event, a sudden spike in investment demand, and the market goes into shock. Here's where the $100 price target comes in. Right now, silver is at $66. To hit $100, it needs to rise another 50. Is that realistic? Let's look at the math. In 2011, silver briefly touched $50, and industrial demand was a fraction of what it is today. Back then, solar consumed maybe 50 to 60 million ounces per year. Today, it's over 200 million. If deficits persist and inventories continue to drain, buyers will panic. Industrial buyers will bid up prices to secure supply. Investors, seeing the squeeze, will pile in. And when that happens, prices can overshoot fundamentals. We've seen it before. In 1980, silver hit $50 in a frenzy. In 2011, it did it again. Both times, the fundamentals were weaker than they are today. So $100, it's not just possible. It's becoming probable if this trajectory holds. But here's the thing I want you to understand. This isn't just a story about silver prices. It's a story about the fragility of the green transition. We're betting the future of our planet on technologies that depend on a handful of critical materials, and we're not prepared. The silver supply chain is a microcosm of a much bigger problem. We talk a lot about building solar farms and wind turbines and EV charging networks, but we don't talk enough about where the raw materials come from. Silver, lithium, cobalt, nickel, rare earths, these aren't infinite, and the infrastructure to mine, refine, and recycle them takes decades to build. We're trying to electrify the world in a decade, and we're running into hard physical limits. So what happens next? There are a few scenarios. In the best case, technology saves us. Researchers find a way to make solar cells that use far less silver or maybe even none at all. Perovskite solar cells, for example, are a promising alternative, though they are still in development and face durability issues. If that technology scales quickly, it could relieve pressure on silver demand. At the same time, recycling could ramp up. Old solar panels contain silver, and as the first generation of panels reaches the end of its life in the next few years, we could recover significant amounts. But recycling infrastructure is limited, and it takes energy and resources to extract silver from used panels. In the middle scenario, which seems most likely, we muddle through. Silver prices rise, maybe hitting $80 or $90 per ounce. spurring more investment in mining and recycling. Manufacturers adapt by using less silver per panel, though they can't eliminate it. Solar deployment continues, but it's more expensive than projected, which slows the pace of the energy transition slightly. Governments step in with subsidies or strategic reserves to smooth out supply shocks. It's not a crisis, but it's not smooth sailing either. And then there's the worst case scenario: deficits deepen, inventories run dry, and the silver market seizes up. Prices spike to $100 or beyond, driven by panic buying. Solar panel costs surge, stalling installations and threatening climate goals. Geopolitical tensions over silver supplies flare up. Countries that control major silver deposits like Mexico, Peru, and China could wield outsized influence. Investment demand floods in, exacerbating the squeeze. And in the chaos, the green transition stumbles. Let me bring this back to where we started. Solar panels are everywhere and they're powering our future. But inside in every single one of those panels is a material that's in crisis. Silver isn't just a commodity, it's the linchpin of the green revolution. And right now we're running out of it faster than we can produce it. The next 5 years are going to be crucial. If solar installations continue to grow at the pace we need to hit climate targets, silver demand will keep climbing. And unless supply catches up through new mining, recycling, or technological breakthroughs, prices are heading in one direction, up $100 per ounce. The $100 per ounce isn't a wild prediction anymore. It's a logical outcome of the trends we're seeing. And when silver hits that mark, it won't just be a headline, it'll be a wake-up call. It'll force us to confront the hard truth that going green isn't just about willpower, policy. It's about resources, physical, finite resources that we need to manage wisely. The silver crisis isn't coming, it's already here. The question is, are we ready to face